morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sumera Abdi and Pavitra Pare. Good morning, girls. It's looking good for the market. So as we speak, we're up close to about, 3/4 of a percentage point. Talking about the markets in numbers, the Nifty's at 17,752. It's been a steady morning so far, gap up opening, and we've managed to retain all those gains. The Sensex too is higher by close to about 525 points. Talking about the big winners in trade, you've got a mix of sectors. So oil marketing companies are doing well after the decline seen in crude prices, now well below the $90 per barrel mark. Shree Cement is the top gainer. ICICI Bank, IndusInd Bank, higher in trade, Axis Bank too. So private sector is contributing. Technology names like Tech Mahindra, Wipro are up and about in trade. Crude consumers like Asian Paints too are having a good session. On the losing side, softness seen in commodity names, so Hindalco, Tata Steel a bit on the back foot, as well as Tata Consumer and Britannia. So some of these FMCG names, which have had a very good run-up in the last couple of days, are taking a bit of a breather. Hi.
Hi, good morning. So this is actually quite a broad-based recovery that we've seen across global markets as well, right? The Dow is up 450 points. You have all of the Asian markets which are trading well. For now, the Nikkei is up around 2.3%. You have Taiwan, which is seeing gains of over 1%. So that sentiment seems to be good across the Asian markets as well. It is really the crude impact, like Reema pointed out, which we're seeing play out. So let's pull a few of those stocks up for you now. All of the paint companies will come up. Those ones are trading in the green. You also have the likes of HPCL, BPCL. These ones are seeing some good moves right now. So HPCL is up around 3.5%. BPCL also seeing a move of over 2.5%. So these stocks really in focus. And on the downside, like Reema mentioned, it is really the metals and consumer pack, which is seeing a little bit of red, but they're perhaps just around 5 or 6 stocks in the red from the Nifty pack. But definitely a good looking screen. Hi, Sumera.
Hi, ladies. Morning. So let's get started and tell you all that we have for you through the next 1 hour. Indices gain in early trade in line with global peers, but are off their session highs. Financials, auto and IT lead the gainers while metals slide. Mid-caps are underperforming. So we'll talk about the market fundamentals with Varun Lochab of HDFC Securities.
Concord trades higher after key brokerages suggest that the land license fee decision now paves the way for privatization. All of the details coming up for you in just a bit.
Interglobe Aviation is under pressure on the back of news flow that the Gangwal family starts selling stake in the company. All the latest details on the story coming up in just a bit.
And a recent note by Motilal Oswal suggests that Bengaluru's real estate market is on the cusp of strong demand. Nirupa Shankar, Executive Director of the Brigade Group, will be joining us to discuss more on that as well.
And also the FADA auto sales data for the month of August shows that total vehicle retail sales are up 8% on a year-on-year basis. Key excerpts from our chat with the FADA President Manish Raj Singhania also coming up. All of that and much more lined up over the next 60 minutes.
Let's start off the show by focusing on the stocks which are in the news. Our entire research team is standing by. First up, let's talk about Concord. Yesterday was a big move. Today as well, the stock is trading higher. Brokerages have suggested that the land license fee decision now paves the way for privatization. Mangalam is here with the key brokerage highlights. Mangalam.
Well, there are a couple of developments in Container Corp. The one land license fee being, the policy being notified yesterday is the one that removes the, last obstacle, so to say, for privatization. And that is something that the brokerages are pinning their hopes on. However, as far as the land license fee itself is concerned, there is no clarity on that. So as a result of which, there haven't been any numbers which have factored into the brokerage estimates. So Credit Suisse has an outperform call. They've always had an outperform call with a target of 700 rupees. They say that this paves the way for divestment, but the benefit will be passed on to consumers, whatever it may be. So that may not mean much margin expansion. Nomura on Container Corp, they're the only one who've upgraded the stock to buy on this news, and they haven't changed the estimates, however, because precise LLF quantum is difficult to determine according to them. Jeffrey says that this is a key step in their privatization process. However, Kotak stands apart. Kotak has downgraded the stock from add to reduce, and the reason why they say this is because they believe that they had factored in 3% of the land cost as LLF. Currently they pay around 6%, and the reduction that came in yesterday for 1.5% is for prospective bidders. So that doesn't happen to Container Corp itself. In fact, they believe that the company may have to lose more if they consider to rebid terminals in search of lower land license fee. And if land license fee does not change from 6%, what it currently is in this situation, it will actually impact their fair value from 730 rupees per share to 690 odd rupees. And they are, not particularly putting any value with regards to privatization in their model, because it is difficult to ascribe a value to the event of a privatization, and which is why they've maintained a reduce on the stock, or rather downgraded the stock.
All right, Mangalam, thanks a lot for getting us all of the details of what brokerages have to say on Concor. The stock is up around 1.5% after the big up move that it saw yesterday. But with that, let's move on and talk about life insurance companies, which are in focus on the back of their August business updates. Yash is here to round up all of the details. Yash.
Well, August was a strong month for the life insurance sector, and the private life insurance industry performed slightly better as compared to LIC. As far as the industry is concerned, in the month of August, the premium grew by 18% on a year-on-year basis. Year to month, that is up to August, the premium for the industry grew at 44%. For private life insurance companies, the August premium grew at 24% on a year-on-year basis. Year to month, the growth was 35%. LIC, importantly, the August growth in terms of premium growth was 15% on a year-on-year basis. That's a good number on a large base, but wait for it. Year-to-month premium was even better. The premium growing year-to-month at 49%. As far as the retail annualized premium equivalent, or AP, is concerned, that also was in the positive territory, going by about 5%. HDFC Life, the August premium grew by 15%. Year-to-month premium grew again by 15%. And retail AP, that saw a growth of about 16%. ICICI Prudential, August premium was up by about 11%, year-to-month was up 10%, though the retail AP for ICICI Pru Life shrunk by about 12% on a year-on-year basis. Now talking about the weakest spot and the strongest spot, starting with the weakest one, Max Life Insurance. August premium, that shrank by about 1%, year-to-month premium was up 10%, retail AP for Max Life again came down by about 12%. The strongest point, that was SBI Life. August premium growing at 21%, year-to-month premium that growing at 44%, so the retail AP came down by about 5% on a year-on-year basis.
Yash, thanks very much for that. Also, Bharti Airtel is a stock that's gaining. There was a big block deal that took place yesterday. Rima, you have the details of who the seller was and all?
Indeed. So yesterday, about 1.8% equity changed hands. So the seller was Singtel, and the buyer is Bharti Telecom. Now, both of them are promoter entities. So this is an inter-promoter transfer. Singtel was the seller, and Bharti Telecom was the buyer. So the overall promoter shareholding remains unchanged at nearly 55%. But this move comes on expected lines, because towards the end of August, Singtel had said that we want to sell a 3.3% stake in Bharti Airtel, which will be bought by Bharti Telecom in the next 3 months. So out of the 3.3% equity, which they plan to sell, 1.8% has been done. So there is still a balance of 1.5%. And this, they had said that we're giving ourselves a 3-month window. So the overall transaction has to be completed before the 23rd of November. The reason for that is Singtel and Bharti Telecom, the Sunil Bharti Mittal family, they want to equalize their share. The reason you're not seeing an overhang in the stock, despite, the equity changing hands, is because this is an inter-promoter transfer and it comes on expected lines. But just a quick update on what the transaction was, which took place yesterday.
All right, Rima, thanks a lot for that. So Bharti is one of the top gainers in the past 5 days or so alone. It has moved up around 6%. But with that, we're going to get into a short break. On the other side, we'll discuss what's going on in the world of commodities. Manisha Gupta will be with us.
Hi, welcome back. You're watching Trading Hour. Over to Manisha now, who joins in to talk about what's happening in the commodities space. And today, the focus is on metals. Hi, Manisha. Morning.
Morning, Sumaira. Thank you for that. Well, yes, we have seen a slight rebound in metal prices today after that sell-off that the New York session saw yesterday. Well, the rebound comes in after we do understand that the Chinese power shortages has led to a decline in production of many of these metals there. But China, in the meanwhile, is also putting for investment when it comes to grid. And that clearly would mean that there is demand going forward coming in for many of these metal prices. The reason you also are seeing support is because the US dollar is taking a pause from the kind of rally that we saw in the previous week. Also, the Chinese mid-autumn festival holidays are on 10th September to 12th of September. So ahead of that, there is some buying that you've seen in many of these metals. If you look at the copper prices, those are off its 6-week lows that we saw the prices trading in yesterday itself. The Chinese copper inventories are at a record low of around 142,000 tons. That has been supportive. And Peru, which is the biggest copper producer, also reports that their production for copper is down by more than 6% for the month of July and August. So that means there is less supply, and the premium on spot for copper demand continues to increase as well. That is the case that you've seen for aluminum also. Yesterday, we were trading at a 17-month lows, but we have seen some buying onto this one as well. I also want to put on table the ANZ report that talks about the Chinese copper and aluminum demand, which says that last year, the copper demand was up by nearly 2.2%. For this year, the expectations are of an increase of 3.6%, and 2023 could see a rise of 6.5% as well. For aluminum as well, they expect the demand growth at around nearly 3.1% for this year and would continue to grow at a speed of 4% in the next year as well. So the markets are looking at lower inventories, lower supplies, even as the economic data is weak. But with the kind of fact that you are looking at lower production, not too many expansions, and expectations of higher demand by the end of this year and the next year is what perhaps has brought many of these metal prices in the positive today.
All right, Manisha, thanks a lot for bringing us all of that action from the metals pack. But with that, let's focus on some more important global market cues. The European Central Bank is due to announce a key rate decision later today. Now, the ECB is expected to front-load a series of rate hikes, with analysts largely expecting a 75 basis points hike today. CNBC's Sylvia Amaro gets us up to speed with all of the details and what we can expect.
All eyes on the central bank. Indeed, the expectation is that they will increase interest rates, but indeed the question is by how much? 50 or 75 seems to be the big debate right now. And so I just want to show you a couple of the most recent comments from ECB officials, starting with the French central bank governor. He said recently that another significant step in terms of interest rate increases will take place this month. This was after the ECB said in July they was increasing rates by 50 basis points. Now, the Latvian central bank governor has also said that the discussion today is going to be between 50 and 75 basis points, also sounding quite hawkish in recent weeks. I also want to show you some remarks from Isabel Schnabel. She also plays a pivotal role in the ECB. She has said that central banks need to act forcefully. This after the latest inflation print out of the Eurozone put inflation, headline inflation, above 9% in the month of August. So it's also a question of credibility here for the ECB, and let's see how the markets will take the decision later on today. Finally, the Austrian central bank governor also said that the minimum in terms of increasing rates today should be 50 basis points. So indeed, this is the big debate for the central bankers as they gather in Frankfurt later on today. But another interesting point to look at from the ECB is the macroeconomic picture. The ECB will be releasing inflation and GDP forecasts later on today, and will be key to understand whether the central bank now thinks that there will be a recession in the Eurozone either this year or next year. And then, of course, when does it expect peak inflation?
Okay, it's still going to be a close call, 50 or 75 basis points. A 75 basis points rate hike can tip the Eurozone further into recession. That's the fear. But if they do less, a 50 basis points rate hike this time, then perhaps it may not be enough to anchor in the rising inflationary expectations. Get into a break. On the other side, we'll discuss market technicals with Himanshu Gupta of Globe Capital. Welcome back. A bit of a knock seen in the market. So we're off from the day's high. Just pull up the intraday chart and you would see that there has been a very slight decline from the top of the trading session. We're off about 60 points from the day's high, but on the whole, still continues to be very steady. Himanshu Gupta is now with us to talk about the market technicals. Himanshu, your thoughts on the day so far? Where are we headed?
Very good morning to you. Well, clearly the markets actually opened with a gap up around the higher band of this trading zone within which the markets have been spending some time for a while. And for now, it seems that there is still not enough confidence or the fund flow which is actually able to take out this 17,750, 17,800, even with the help of a gap. Having said, I think from the past few days, the inherent strength of the market remains to be strong, and on every decline, we have seen some buying coming in at lower levels. So I think at max, for now, I think this still continue to remain in the consolidation band till the time we do not take out its 17,750 or 17,800 on a closing basis. So I'd like to give a room of this 50 points. Once 17,800 is taken out, I think we will be comfortable back in the bull run, and then we will be seeing some heavy short covering and fresh buying, especially in the large caps. Talking about Nifty banks, I think I would be looking for a move above 40,000. That's today's high. If that's taken out towards the second half of this market, second half of today's weekly expiry, we can expect a short covering towards 40,300, 40,500 levels in today's session itself. For now, holding longs with a stop loss below 39,800 on Bank Nifty and 17,680 on Nifty is what I recommend.
All right, Himanshu, that's on the index level. Any individual trades that you would like to recommend as well?
Yes, sure. So first one is a cash segment stock, Sumitomo Chemicals, that has given a very strong breakout in today's session. I think that stock is heading higher towards 530 and 550 in the short term. So Sumitomo Chemicals can be bought with a stop loss below 504, target price 530, 550. And second one, large ICICI Bank, private sector bank, that has given a very strong breakout in today's session. So I think the chart and the derivatives data is suggesting that ICICI Bank is headed to make newer highs in the short term. So ICICI Bank is a buy on from my side for a target price of 925, 930 in the immediate short term, and a stop loss below 890 can be placed here as well.
Anshu, thanks very much for joining in with your trading ideas. We're going to take a very quick break now. We have discussed the technicals of the market, but up next we'll talk about the fundamentals. Varun Lochab of HDFC Securities will be with us. Stay tuned.
Welcome back. You're still watching Trading Hour. The market is holding up with a gain of 110 points right now, so looking quite steady there, 0.6% higher. The Nifty Bank is where you're seeing a lot of the strength come through. It is around 1.2% in the green, but the mid caps are taking a little bit of a breather today and seeing a little bit of an underperformance there, so only around 0.3% higher on the mid cap index. But the Infosys Buyback cool-off period ends today, so Rima is standing by at the big wall with some of the details that we should be tracking. Rima.
Thanks so much for that. So as you pointed out, the buyback period for Infosys cool-off has ended, which basically means that there has to be a one-year gap between when the buyback ends and the next buyback can be announced. Now that the buyback cool-off period has ended, it means Infosys is eligible for a buyback. So the question is, should we expect an announcement immediately? The answer is no. Now, in the last buyback, the gap between the cool-off period ending and the company announcing a buyback was a good 7.5 months. And the one prior to that, it was just about a matter of 2 to 3 weeks. It's possible that the 2021 buyback was a bit delayed due to COVID. The company was considering, saving up a bit on the cash. But the earliest we could expect an announcement is perhaps with its Q3 numbers. That's the 12th of October, because typically Infosys announces its buybacks along with numbers. Now let's understand what the past buybacks of Infosys portray as a 10. For starters, it will be the company's fourth buyback, and the details in terms of the size are up for you on your screen. The 2021 buyback was 9,200 crore, the one before that was 8,260 crore, and the one before that was about 13,000 crore. The last two buybacks were open market buybacks, not a tender buyback. And the maximum premium at which the buyback was done, the price at which the company was willing to buy back shares, was close to about 25% in the previous buyback. So in terms of a precedent, what is it that we can expect? Perhaps an open market buyback and no promoter participation. Now let's move on in terms of what Infosys' stated capital allocation policy is. It is to return 85% of its free cash flow over a 5-year period between FY20 to FY24 through a combination of dividends and buyback. And so far, the company has returned 73% of its free cash flow for FY20, 21 and 22 combined. The quantum of dividend being doled out by the company has also started going up, and last year the company doled out or paid close to about 31 rupees in dividend. So now it's all eyes on this cash-rich tech major on when it plans to make a buyback announcement and what the contours of that could be. Back to you.
All right, Rima, thanks very much for that. Let's now invite Varun Lochab of HDFC Securities to talk a bit about where the market looks to be headed. Varun, hi, morning. Thanks very much for joining in. Your note makes mention of the fact that on an index level now, the upside seems limited, right? So the opportunity now lies in bottom-up stock picking. Even today there's a note from Morgan Stanley where they say that small caps perhaps are preferable to large caps because the growth momentum could look to sustain from here. So what exactly is the kind of market cap that you're looking to go hunting in? And is it more in the mid-cap end, or are you also looking aggressively at small caps now?
Yeah, hi, good morning. So actually, we are looking for ideas across all, market caps. And frankly, it's not that in large caps, we are not finding any ideas. Even in, some of the Nifty stocks and large caps are looking reasonable for the kind of growth upcycle, which should come through in FY23 and more in FY24 earnings. However, we see, more opportunities in some of the mid caps and even select small caps. But out there, obviously it's always more bottom up, and you have to be very confident on management quality and, promoter quality and asset and their capital allocation over a period of time rather than just looking at earnings. But given the fact that we are positive on economy from a 12 to 18 month view, if you see mid and small caps are more exposed to to how the economy does. They are more economy facing sort of stocks compared to large caps. So as things get better on the economic front, we believe mid and small caps will do well. And even in terms of valuations, we are seeing better sort of opportunities in select mid and small caps, compared to large caps. But there are opportunities all across. But at an index level, we don't see a runaway sort of opportunity given the fact that it's already trading at 21, 22 times.
All right, Varun, good morning and thanks for joining us. This is Pavitra. So you said that there are opportunities in the large cap space as well, and I'm seeing a lot of the financials find their way into your portfolio. So you have something like an SBI, Axis Bank, ICICI Bank, a lot of these. Do you think that these are still attractive opportunities to get into?
Yes, so I think large banks is one space that we have been quite positive on in last 12 months, and we have kept increasing our weight. We still see good upsides as the credit growth is picking up and NPA cycle is completely behind, for these large banks, and they are well capitalized, especially ICICI. So ICICI, Axis and SBI are our top picks within the banks. Similarly, some of the NBFCs also like Chola, we have been positive on. So financials is probably one of the best way to play, the economic growth uptake. Second is industrials and infrastructure. We recently released a detailed report on CapEx, how the upswing is looking quite sustainable from a 2 to 3 year point of view. So till now it was only government CapEx which was leading, but now we are, our bottom up work suggests that even the private sector CapEx will actually pick up and much more sharply than what the government CapEx, which is already strong, will grow at, but private sector will probably surprise on the positive. More in FY24 and 25, but so from that perspective, a lot of these industrial names come in. Siemens, we are positive on. Some of the other infrastructure names we are positive on, like KNR, GR Infra, NCC. So there is a whole host of sectors which are looking promising, while stocks have run up ahead of those earnings. It's not that capex upcycle is not being discounted, but we are still able to find some opportunities when we are taking a 12 to 18 month view.
Varun, the big macro story now which is unfolding is that the global markets are likely to, global economies, the developed ones are likely to go into recession if they're not already in. And it could be a deep one given the way the energy crisis is unfolding, particularly in the Eurozone. There are blackouts, factories may need to shut down production because there is not enough gas to keep them running, or the gas prices are too high. So in terms of the impact on the Indian companies, if the US markets and the European markets get into a deep recession, apart from IT, Is there any other sector where we have a direct correlation or an indirect correlation which you'll stay away from?
Frankly, not too much beyond IT. Pharma is also there to a limited extent, but we don't think, that will see that sharper impact. But if you look at barring IT, actually mild recession would work in India's favor, given the fact that some of the commodity inflation, which seems to have peaked out, should remain benign over next 6 to 9 months if some of the big developed economies remain under pressure from a growth perspective. So a mild recession may be a good news for Indian economy, but a deeper recession will probably put some pressure on, on indirectly through lower exports, which will result in higher CAD probably because the domestic demand is good. So you might still see imports being strong. So a higher CAD will probably put a bit more pressure on currency. So it will, which can push up domestic interest rates later on with a lag. So there would be indirect impact more on macroeconomy rather than, the sectors per se. In terms of sectors, I think it's largely IT and to an extent pharma, which gets impacted, and maybe a little bit of, chemicals if there is a serious disruption, in Europe, which would be a short-term supply disruption. And I think medium-term Indian chemical sector stands to gain.
Okay. Varun, you think domestically this fear of inflation, could it, dampen the festive season, or do you think that revenge spending is still, at least for now, going strong?
I think if I look at domestic consumption trends, they are looking strong, especially on the urban consumption side. We are not seeing any impact of higher inflation denting consumer sentiment. Obviously, rural consumption has been a bit muted and soft for some time, and that out there we are still not fully convinced on the pickup. But urban consumption, I think India has seen this level of inflation for a long period of time. So in terms of delta in inflation, it's not been a severe one for India, and wage inflation has also been strong in the last 6 to 9 months across sectors. So I think urban consumption and sentiment around the festive season looks fairly strong, and even our channel checks across multiple sectors is suggesting that it should be a good festive season.
All right, Varun, we'll leave it at that today. Thank you very much for joining us and taking us through your outlook on the market. With that, we're going to get into a short break now. But on the other side, we will speak with the management of the Brigade Group, Nirupa Shankar, to discuss the on-ground demand picture for the company. Stay tuned for that.
Welcome back. Let's put the spotlight on the real estate companies. Now, yesterday, Motilal Oswal came out with a note where they say that Bengaluru's real estate market is on the cusp of very strong demand, which is driven by strong IT hiring, increasing count of global captives, salary increments, and best-in-class affordability, notwithstanding the floods that the city is currently going through. But they do believe that Bangalore is on the cusp of a strong rebound in demand. There is low inventory overhang, just 15 months, high affordability in Bengaluru, I guess, when you compare it to cities like Mumbai, and this will allow for gradual and consistent price hike. And Motilal Oswal prefers companies which derive 60 to 75% of their sales from Bengaluru market. They initiated coverage on Prestige, Brigade and Shobha with a buy rating, and on Brigade, they've set the target price at 720. We're now joined by the management of Brigade. Nirupa Shankar, the executive director of the company, is now with us. Good morning, Nirupa, and thanks so much for joining in. Good morning. How has demand been, right? Because currently we are in a bit of a tenuous macro environment. Inflation is hurting the pockets, interest rates are rising rapidly, and they're expected to continue to rise. In that context, any signs of a slowdown?
Yes, so thanks for the question. We've had a very good Q1. We did about 1.25 million in sales. And for this coming quarter, we've had a very robust Q2 as well. Without getting into the specifics of the numbers for Q2, I would like to say that, the demand is continuing. Yes, we've had the increase in the interest rates, and it is expected to increase marginally further. but we don't expect to see a massive impact on the demand for housing. I think people, you mentioned a few facts before from the Motilal Oswal report, and that continues. There is a lot of disposable income for the IT professionals in the city. They do want to continue buying larger homes in gated communities. They want ready-to-move-in apartments, and they want to go with reputed developers just because of all the variables that can happen if they don't go with a reputed brand.
And I'm sure we will not see a massive impact on real estate demand due to rising interest rates, but can we still see some sort of an impact, some moderation in demand from the peak levels? And if yes, what could it be?
Quite frankly, as I mentioned, we had a very healthy Q1, and Q2 is expected to be just as healthy, if not better.
Okay.
Okay, Nirupa, good morning and thanks for joining us. This is Pavitra. So do you have any kind of target that you're working with for FY23, if you could help us for the full year?
So typically we're not allowed to give guidance, but typically what we always say is we do try to have a 20% year-on-year increase. That's the conservative estimate we give every year, because as a growing listed entity, that's the minimum we would like to target.
Okay, since we're talking about your sales, can you also take us through what's happening as far as the geographical picture goes, and what are the kind of trends that you're seeing play out? Since you don't want to take us through any kind of target, if you could just take us through that.
So generally what we're seeing in the market, so if I may just walk you through the various real estate asset classes. For retail, for instance, we are seeing better than pre-COVID numbers coming into the malls. The sales is almost 30% higher than pre-COVID. And of course, we're just getting into the festival season of Diwali and Dasara in October. So that's expected to be a bumper month in terms of sales. Theaters, family entertainment centers, they're all doing extremely well. The office tech parks are slowly regaining their occupancy. So while, of course, they were in single digits and some in early teens earlier this year, we've now reached about 30 to 40% occupancy in the office park. So people are coming back to the office. There is robust hiring, as mentioned earlier. So a lot of the IT professionals who do fuel the residential market in Bangalore are looking to spend their monies on larger apartments, good facilities. They want larger rooms in case they need to work from home. And that is the traction that we've been seeing. Ready to move in homes is always in higher demand. And what we've seen is even in the upcoming markets where apartments can go up to 3,000, 4,000 square feet on the outskirts of the city, those are in high demand as well.
But Nirupa, you don't think that, these civic issues, for example, now the chaos which is caused by the current floods, and I understand that this year it's worse than it has been in previous years and limited to a certain area, and most of the construction would be outside of that area, like you mentioned. But don't you think there could be a dampener for realizations or prices going forward?
Of course, Bangalore has seen these unprecedented rains, and it has disrupted life in a big way in East Bangalore, I would say, in Bellandur, Vartur, that part of town. But I would say that, it's a temporary phase, probably for the next 2 to 3 days, and the prior 3 to 4 days, work has been somewhat affected in terms of construction. Just in terms of access, people can't get to those areas and can't come out. So if it's construction materials going to a particular construction site, it's difficult. Obviously, we've been hearing news of some apartments and homeowners being displaced because of the heavy rains. But thankfully, at least in our projects, we have something called a monsoon mitigation matrix. So a large checklist to see that and ensure that no project is flooded because of these heavy rains, right? And while Bangalore typically sees this every monsoon, quite frankly, we face similar issues. This year has been worse than the previous years. But I think even as of today, there was a lot of news in the newspapers today about the chief minister talking about a master plan for East Bangalore and for new development areas, because it is required, in terms of the kind of infrastructure. Every time there's a new micro market being created for the city, the urban infrastructure is very important. So there is a talk of a master plan being created and relooking at the drainage system. So I believe this is a temporary setback of a week or so. We're not expecting such heavy rainfalls in the coming days, so it's probably a setback of 1 week, but we're not expecting that to impact demand. Of course, this does raise some awareness in the customers. So when they do come to a project, I'm sure they would want to know what is the steps taken by a project or a developer to ensure that there is no flooding in case of heavy rains. So there are certain steps a lot of us take. As I mentioned, we have something called a monsoon mitigation matrix to ensure that the drainages are not blocked, whether internal or external. The drainages connecting from the project to the roads are not blocked. We have to have extra pumps in the sump tanks and in the basements to ensure that water can be removed from the basements in case there's water logging. So there are various things that developers can do to prevent water logging in their projects.
Very quickly, do you think real estate companies will be able to continue raising rates, prices? Or do you think, we've hit the peak in terms of price increases?
See, quite frankly, if the input costs continue to rise, the margins of a lot of developers are not as high. So some of it will have to get passed on to the customer if the rising input costs continue at the way it's been doing. We've managed to increase prices by 5 to 8% in the previous quarter. And obviously, with the price increase, you have to be able to justify why you're doing that price increase, apart from the rising input costs. Also, the expectations of the customers will be that much more for a premium developer. So if you are going to charge a premium, then you have to be able to justify why your project or product commands that price.
All right. Just one final question before we let you go. What do you think about the, Mumbai market? We were speaking to Godrej Properties earlier. It's been the best August that we've seen in the past 10 years or so. Growth for August is up 20% year over year. Does this market interest you?
I mean, it's an interesting market, of course, for the whole country to watch and observe. But at the moment, our focus lies in Chennai, Hyderabad, and Bangalore. We want to continue to increase our market share and market presence in these markets. And quite frankly, they've been very strong and they've been serving us well. So we have large expansion plans for instance, Chennai and Bangalore. And of course, we're always on the lookout for additional parcels of land in Hyderabad as well.
All right, got that, Nirupa. We'll thank you on that note. Thank you very much for joining us and taking us through the outlook for Brigade Enterprises. They're saying the demand is looking solid in Bangalore, but they're not right now, at least, looking to venture into the Mumbai markets. By the way, speaking of the real estate sector, you have to take a look at what's happened over the past 1 month. The Nifty index is up around 1.4% in this time period. And in the same time period, you've seen the Nifty real estate index, which is up around 8%. A few of the stocks will come up for you, which have seen a big rally. So something like a Prestige is up over 12%. You've seen Brigade itself, the one that we'll be speaking to right now, up around 8.5%. DLF, Sobha, Godrej Properties, all of these have clocked in strong gains as well. So the entire space really is doing very well and has seen quite a rally. But with that, we're going to get into a short break now. Lots more market action coming up for you in just a bit.
Hi, welcome back. You're watching Trading Hour. Let's get in some updates now from the auto sector. The Federation of Automobile Dealers Association, FADA, has released sales data for the month of August. Total vehicle retail sales have grown by 8% on a year-on-year basis, while commercial vehicle sales have seen a year-on-year growth of about 24%. My colleague Parikshit Luthra spoke with FADA President Manish Raj Singhania on these numbers, the trends that are shaping up, and the outlook. Let's hear out that chat.
Festive season, the Ganesh started at the month end, and most of the billings happen in the last week of the month. So I think though it shows a slow start, but the required vehicles not reaching the dealerships for the customers, that is reflecting in the figures. And overall, the festive outlook is very positive, especially for the passenger vehicle segment. The 40-day period from start of Navratri till Diwali, we see a very, very positive trend, and retails would be very good.
Okay, so what were possibly the reasons for the vehicles not reaching the dealers during Ganesh Chaturthi?
So billings normally happen in the last week and last week of the month. So Ganesh Chaturthi has started at the month end, and it continues in the month of September. So though it seems a slow start, the vehicles and the logistics time has also increased for the dealers. The vehicles take normally more time reaching the dealerships due to logistic issues prevailing.
Okay. How do you think the flood-like situations in different parts of the country are affecting the movement of customers? Because we're also seeing a continuous stress in the two-wheeler segment.
So rainfall have been kind of scattered. Some areas the rainfalls have been very good, and there has been flood-like situation in few areas. That definitely acts as a dampener to auto retails. The major states like UP and Bihar, we see a kind of scarcity of rainfall there. There are big states and auto retail numbers coming in big from those states. Two-wheeler has not been able to respond so well, but they are bottom of pyramid segment, and the increase in prices of two-wheeler and plus the vehicle fuel cost, acquisition plus the operating cost both has gone up for a two-wheeler customer, and plus the new launches in terms of whether it is electric vehicle, and customer is kind of confused or not able to decide whether to go for an electric vehicle or the IC engines. The electric vehicle availability itself is a big issue for two-wheeler segment. We see a definite positive trend in increasing numbers of two-wheeler. As you can see in the year-to-year basis, there's a positive trend. The numbers for the festive season for two-wheeler, we see a definite growth happening there.
All right, definite growth for the festive season in the two-wheeler segment. But when it comes to discounts during the festive season, festive schemes, how do they compare to last year?
So as you can see in PV segment, there's a lot of bookings available, and the vehicle shortage is there. Few models, the bookings have crossed a lakh mark, and waiting period for few models are more than 1 year, 2 year period. So we don't see a very kind of attractive discount schemes coming in for the customers. There are obviously some running models with all OEMs, and kind of Indian customer feels the discount is an integral part or it's his birthright. Some basic attraction to get the customer to the showroom would be there for the running models, but not on the booking models.
All right, that is the Federation of Automobile Dealers Association telling us what every auto company has been saying, that demand is looking extremely solid and it is likely to pick up further during the festive season. With that, let's move on and talk about another key event that came through yesterday. Tech giant Apple unveiled 4 versions of the iPhone 14, the new AirPods Pro, as well as the premium Apple Watch at its much-awaited far-out event. The tech behemoth sprung a surprise at the event, however, by keeping the US prices of the iPhone unchanged despite considerable upgrades. CNBC's Steve Kovac sums up all of the launches for us. Steve.
Apple holding its first in-person iPhone launch event since the pandemic began, and here's a quick recap of what we got. First off, the iPhone 14 line. 4 models there. There's 2 regular models and 2 Pro models. And for the first time, that regular model is going to get the bigger size screen. They're calling it the iPhone 14 Plus. On the Pro side, a little bit of a design change here, especially on the screen. Instead of that larger cutout for the facial recognition sensors, they've kind of squished it down into what they're calling a dynamic island, which is a smart bit of software that can play around the camera holes and show you different things like notifications and widgets. And some safety features coming in the new iPhones and Apple Watches, like the ability to connect to satellites when areas don't have cell phone service. This is for emergencies, sending messages to first responders to come in case you need help. And speaking of Apple Watches, let's talk about what's new there. There's the Apple Watch Series 8, which is an iterative update over the Series 7, and then the big Apple Watch Ultra. This is a very expensive $800 version of the Apple Watch. Brand new design. It's built to be more rugged and durable. In fact, you can even dive with it. And then we got the new AirPods. These are the AirPods Pro with better noise canceling than the previous version, and more importantly, better battery life. And finally, a surprise for investors with tough inflation hitting all sectors. There was some speculation in the investor community that we'd see a price increase on the new iPhones. That did not happen, and you can read into that as a signal that Apple believes it can hold on to those strong iPhone margins despite this tough macro environment.
Well, yesterday, the Indian cabinet approved the land license fee policy for railway land leasing. Let's cut across to the railway minister who's currently speaking.
18% कहाँ पे 17-18% कहाँ पे 6-7%. So railway is that way highly economical from the point of view of cargo. Correct? और waterways इससे भी ज़्यादा economical होता है. Waterways अगर देखोगे तो ये 5-6 रुपए will become 3-4 rupees. लेकिन waterway तो nature जहाँ देता है वहाँ देता है. Railway you can always create. तो हमें as a policy हमें ये हमेशा एम करना चाहिए कि ज़्यादा से ज़्यादा कार्गो रेलवे में आए, राइट? तभी देश की लॉजिस्टिक्स कॉस्ट कम होगी. जो चीज़ अगर मान लो मेरे पास कोई चीज़ 6 रुपये पे है, कोई चीज़ 18 रुपये है, जब एवरेज लूँगा उसका 12 रुपये आएगा. अगर ज़्यादा से ज़्यादा चीज़ें 6 रुपये की तरफ होएगी तो एवरेज 12 से कम आएगा, राइट? बहुत सिंपल सी बेसिक मैथ है. तो ये जो इसको कहते हैं वेटेड एवरेज कॉस्ट. तो वेटेड एवरेज कॉस्ट अगर लॉजिस्टिक्स की कम करनी है देन वी शुड ट्राई एंड गेट एज मच कार्गो अवे फ्रॉम रोड टुवर्ड्स रेल. तो वो कैसे करेंगे? प्रधानमंत्री जी ने जब गति शक्ति का फ्रेमवर्क दिया तो उस फ्रेमवर्क में ये भी था कि मैक्सिमम हमें मल्टी मॉडल डेवलपमेंट करना चाहिए कार्गो टर्मिनल्स का. वो करने के लिए हमें मैक्सिमम पॉसिबल जहां जहां रेलवे लाइंस हैं वहां पे हमें कार्गो टर्मिनल्स बनाने चाहिए. अब रेलवे लाइन है, वहां पे कार्गो टर्मिनल बनाना है तो दो ऑप्शन है. एक ऑप्शन प्राइवेट लैंड लो, एक ऑप्शन रेलवे की अवेलेबल लैंड को यूज करो. करेक्ट? 80-90% अभी तक का जो एक्सपीरियंस है वो ये है कि प्राइवेट लैंड इज, क्योंकि बड़ा एरिया आपको चाहिए होता है. रेलवे का क्या होता है, ट्रैक के साथ एक छोटा सा पोर्शन अवेलेबल होता है. ट्रैक के दोनों तरफ तो कुल मिला के करीब 40 मीटर का टोटल हम राइट ऑफ वे लेते हैं. तो 40 मीटर्स के आसपास की हमको अवेलेबल लैंड अवेलेबल रहती है. तो जनरली लोग प्राइवेट लैंड लेते हैं. लेकिन ये 40 मीटर्स का पोर्शन जो होता है जिसके थ्रू रेलवे कनेक्टिविटी देनी होती है उसमें बड़ी दिक्कत आती थी. क्या दिक्कत आती थी? दिक्कत आती थी कि रेलवे की लैंड पॉलिसी में था कोई भी अगर आपको रेलवे की लैंड यूज करनी है तो उसमें केवल आपको 5 साल का लाइसेंस पीरियड होता था. 5 साल का लाइसेंस पीरियड अगर मान लो कोई व्यक्ति एक बड़ा टर्मिनल बनाना चाहे जिसमें 500-600 एकड़ का बड़ा डेवलपमेंट करता है, लॉजिस्टिक्स हब बनाता है, उसमें खूब सारी क्रेन्स लगती है, गैंट्री क्रेन्स लगती है, मोबाइल क्रेन्स लगती है, सरफेस को पूरा कंक्रीट से बनाया जाता है. इतने बड़े इन्वेस्टमेंट के बाद में हर 5 साल में रिन्यूअल करना पड़े तो देन इट्स वेरी अनसर्टेन. व्हाई वुड एनीबॉडी इन्वेस्ट? लॉजिकल है ना ये पॉइंट. तो इस 5 साल को अगर हम ठीक कर दें, वी गिव इट अ सर्टेन 35 इयर्स का पीरियड, राइट? 35 इयर्स का एक पीरियड दे दें और एक क्लियरली डिफाइंड फॉर्मूला बना दें तो बहुत सारे लोग रेलवे के साथ जुड़ के अपने मल्टी मॉडल कार्गो टर्मिनल्स बनाएंगे. इसको हमने कहा गति शक्ति कार्गो टर्मिनल. गति शक्ति कार्गो टर्मिनल क्यों बोला है? क्योंकि इसमें रेलवे और रोड दो मोड्स आपस में जुड़ रही है, इंटीग्रेट हो रही है, राइट? दो मोड्स का इसमें इंटीग्रेशन हो रहा है. भाई मान लो अपने गढ़ी हरसरू है, राइट? इसके पास में मानेसर है. मान लो मानेसर के पास में एक मल्टी मॉडल कार्गो टर्मिनल बनता है. उसके आसपास 20-30-40 किलोमीटर के एरिया से ट्रक से सामान लेके आए, इस मल्टीमोडल कार्गो टर्मिनल में रखा, गति शक्ति कार्गो टर्मिनल में रखा सामान को, और जैसे ट्रेन की रेक आई उसमें लोड कर दिया. लोड करके वो जिस भी देश में जहां भी जाना है वहां चला जाए, राइट? सो दिस इज द मल्टीमोडल कार्गो का कॉन्सेप्ट. तो अभी ये लास्ट दिसंबर में जब ये पॉलिसी फ्लोट की थी, गति शक्ति कार्गो टर्मिनल की पॉलिसी, बहुत अच्छा रिस्पॉन्स आया. हमारा कितना 90 कितना था वो नंबर, क्या था एग्जैक्टली, करीब 90, समझो 94 है, 93 है, 93 के आसपास फर्म एप्लीकेशंस आ गई है. 93 कार्गो टर्मिनल्स, गति शक्ति कार्गो टर्मिनल्स बनाने के लिए फर्म एप्लीकेशंस आ गई हैं. एंड अराउंड 62 और 64 ऐसा कुछ नंबर है, 65, जो पीपल हैव एक्सप्रेस्ड इंटरेस्ट इन डेवलपिंग मोर कार्गो टर्मिनल्स. एवरीबडी वांटेड कि इसमें एक क्लैरिटी आए हमें, हम 5 साल के बेसिस पे हम इन्वेस्टमेंट नहीं कर सकते, हमें आप 35 इयर्स एक्सटेंडेबल टू अनदर 35 इयर्स की एक क्लैरिटी दो। अच्छा, एक कार्गो टर्मिनल डेवलप होता है, करीब करीब 100 लोगों को उसमें रोजगार मिलता है डायरेक्टली, राइट? क्रेन ऑपरेटर्स होंगे, क्रेन के हेल्पर्स होंगे, मैकेनिक्स होंगे, फिटर्स होंगे, आपको सुपरवाइजर्स चाहिएंगे, आपका वेयर हाउस बनाए तो वेयर हाउस के अंदर की जो अकाउंटेंसी है, जो स्टोर कीपर्स हैं, वो सब कई तरह के इसमें जॉब्स क्रिएट होते हैं। करीब करीब एक वेयर हाउस में 100 लोगों के आसपास लोगों को रोजगार मिलता है। तो सोचो अगर 300 वेयर हाउस, अगर 300 गतिशक्ति कार्गो टर्मिनल अगर हम बना लें अगले 4-5 साल में मेहनत करके, तो करीब करीब हमको 1,25,000 1,20,000 के आसपास रोजगार क्रिएट होता है, बिकॉज एवरी डायरेक्ट जॉब इज क्रिएटिंग 3 मोर इनडायरेक्ट। कैसे? मान लो कोई ट्रक आई, राइट? वो ट्रक वहां पे कार्गो लेके आई, तो रास्ते में ट्रक का ड्राइवर है, ट्रक का हेल्पर है, रास्ते में पेट्रोल पंप है, रास्ते में कोई ना कोई खाने की जगह होती है, कोई ना कोई मेंटेनेंस की होती है। तो हर एक जगह एक जॉब डायरेक्ट जब क्रिएट होता है तो उसमें 3 और इनडायरेक्ट जॉब्स क्रिएट होते हैं, राइट?